Hey everyone, my name is Marcus and welcome to our channel. Our goal here is to help you navigate through this volatile market and help you make the best investment decisions. For those of you who are new to our channel, welcome. And for those of you who are not, thank you for supporting us all this while. So today's video will be about a rather special topic, which is the year in review 2020. Just like how many websites like Spotify give you your songs in review, we will also be doing one for the general market. This will be a two-part video series where in our first part we will cover the first half of 2020, and in the second video we will cover what happened in the second half of 2020 as well as follow up with some predictions about what is going to happen. Okay, before we dive down deep into the details of this video, we would really appreciate if you could leave a like on our channel below and consider subscribing to us for more premium content. Beginning with quarter 1 of 2020, it definitely didn't start off well because after finalizing our to-do list for 2020 and deciding on our New Year aspirations as well as what huge names we were going to invest into this year, COVID-19 came and it caused the stock market to crash by almost 24 to 35%, a huge range depending on which stocks you were holding, especially for the growth stocks and the technology stocks which got hit unfortunately hard. Even though China was the first country to suffer from the coronavirus pandemic before it eventually spread to other global nations, we have to take into account that their domestic market wasn't actually impacted that hard. Rather, it was the stocks with the largest volume, such as in the US, which were impacted the most. So for those of you value investors and passive investors out there, you may not have felt the brunt of the impact, but for those of you who were chasing hot growth stocks, be it on Twitter or on Wall Street Bets, you would have felt the brunt of the impact, where you see your portfolio in the red for many weeks in a row. And this caused many things to change in our daily lifestyle, be it from specializing in online shopping, be it remote working, as well as video conferencing. You have to take note that because of this surge in working from home, many of the stocks that focus on working from home also surged. For example, Zoom. Because of the fact that everyone was cooped up at home, many of the tourism and airline stocks such as Cruise Carnival, Delta Airlines, Boeing, they were all hit really bad. And many value investors were thinking that this would have been a good opportunity to buy the dip. But it turns out that these value stocks who were hardly beaten down by the pandemic continued to stay at their 52-week lows for the rest of the year, which turned out to be a huge value trap. Another notable incident that happened in the first quarter of 2020 was the crash of Luckin Coffee, which was Starbucks' Chinese rival for those of you who are not familiar with the name. The reason behind the crash was that regulators unveiled a coffee scandal where it revealed that the company fabricated roughly 2.2 billion renminbi in reported sales. The next trading day after the news broke out, the stock immediately dropped by 75%. It was one of the worst drops I've ever seen, and it was paradise for the short sellers on the stock. Ending off the first quarter of 2020, we have to note that this bear market was short-lived and it only lasted for 1 month, and it confirmed many people's predictions for a V-shaped recovery rather than a more tame U-shaped recovery. By the year end, the DJI had already reached a historical high of 30,000 plus points, with many other global indices also breaking their all-time highs as the stocks continued to surge from their March lows. Okay, now moving on into the second quarter of 2020, the tumble continued, albeit it was a bit restrained. For example, the oil crash caused oil prices to go negative, so they are essentially paying you to buy oil. This was because oil prices were already under severe pressure from clouding global demand, and to make matters worse, Saudi Arabia and Russia had launched a price war and decided to pump out even more oil after OPEC and their oil allies failed to reach an agreement on supply cuts. On April 20, the contracts for oil fell all the way to USD negative $37.63 per barrel, which was a near 300% drop. Absolutely crazy considering how even if you were to invest in the worst listed equity on the stock market, it could only fall by a maximum of 100% to zero. This 300% drop was definitely not a black swan event, as the build up to it was very apparent as investors were aggressively selling off their unwanted contracts just before the expiry. But as with all bearish stocks, they do not stay in bear zone territory for long, and oil soon recovered with a 90% jump in May. Another important event to take note in the second quarter was by April, policymakers around the world had already prepared and were planning to roll out mammoth stimulus bills to keep the economy afloat during the pandemic. For example, in the US, Congress rolled out a USD $2 trillion relief bill, which was the largest in US history, which included $1,200 in direct payments and also included extra healthcare funding and loans for small businesses which were hit the hardest during the pandemic. In the EU, nation leaders convened to inject roughly USD 590 billion worth of stimulus and built a European recovery fund aiming to raise USD 857 billion from international capital markets. Lastly, in Japan, the cabinet approved Prime Minister Abe's economic stimulus plan, which was worth $2 trillion intended to provide finance and subsidies to businesses in trouble, similar to the previous two plans I mentioned. To top off the quarter, we saw on June 30 where Hong Kong officially welcomed its own national security law after months of social unrest. This caused stocks listed in Hong Kong to tumble, which hurt many American investors, considering how the Hong Kong Stock Exchange was one of the most direct ways for overseas investors to directly partake in China's huge company offerings. As we mentioned in a previous video, China recently launched their STAR market alongside the Shanghai Composite Index, which provided another avenue for the nation's hottest startups to list there. And I'm sure many of you are very interested in Chinese companies, with some of them showing valuations and growth almost twice that of even the hottest US growth stocks. Think of names such as Baidu, Tencent, and Pinduoduo. Okay, that's it for this week's video. We hope you learned from this video and do share with us any major events that we missed out in the first two quarters of 2020. Stay tuned for our channel for the second part of 2020 in review. Until then, invest safe.
Ever since the day that you